Hello friends, we'll be discussing a problem which is related to the cost of inventory, and this will have the preparation of store card ledger. Basically, you will have sales and purchases both here. Now, this illustration that we're talking about will be a little different and will be a little exciting for you to work on, because when we are talking about these details, we are basically talking about certain things that we want to discuss with you. This illustration will have more details of a store card. So basically, you'll be able to understand how FIFO works, how LIFO works in practical terms when there are sale transactions also being included here. So let's start with one of the illustration that we'll be mentioning down here. Let's jot down that illustration first. So we basically have to prepare a store card ledger here under the three methods, that is FIFO, LIFO and weighted average method, and we have to use the cost sheet as well. Now, while we are using the cost sheet, we understand that these details are supposed to be mentioned in such a specific way. So let's start with the illustration, or rather let's start with jotting down in what the illustration is all about. So we have the details here mentioned. That means again date, quantity, rate and amount will be mentioned here. So while we are mentioning this question, or rather while we are jotting down this question, I'm explaining it to you what exactly we are going to do. So we have mentioned down date, we have mentioned down particular, which mentions, or rather which will state whether this is a purchase transaction, sales transaction, opening balance, closing balance, whatever it is. Now the quantity will be also mentioned and the rate will be also mentioned. I'm adding another column to it which will state or talk about the amount of here. So the first item that we have mentioned here is 1st of July opening balance has been mentioned for 50 units at the rate of 10 per unit, and the amount here is 500 rupees, which has been mentioned. Similarly, we'll go on to the next item that is supposed to be mentioned. Now the next item that has been mentioned is referring to July 5, where there is purchase of stock. Now the purchase has happened for 60 units at the rate of 9 per unit. That gives you a total of 540 rupees there. Now again on 13th of July, there is a sale transaction that has been mentioned here. Now with this specific sale transaction, 70 units have been sold out, and that mentions, or that refers to a specific amount, which is 18 rupees. That means 70 units have been sold out at 18 per unit, and the amount is 1260. That is the total amount. Now on 23rd July, there was another purchase for 40 units and the rate per unit was 8. So that gives you a total of 320 purchase here. Again on 26th of July, there was another purchase transaction of 20 units at the rate of 16 per unit. This gives you a total value of 320 rupees. Now on 30th of July, the last transaction states that there was a sale transaction of 90 units and the rate at which it was sold out was 19 rupees per unit. So the total sale amount was 1710, which has been mentioned. Now we have to prepare a store card ledger under all these three methods, that is FIFO, LIFO and weighted average method, and we have to show a cost sheet, that is comparative cost sheet that we have prepared in the earlier video. Similar to that, we'll start with the LIFO, FIFO or weighted average method, and then we'll see. Now the fun part here is that you understand that the dates have been mentioned in chronological order. So you understand what is the balance that is left with you, and out of that balance, how many sales are going to happen. So after that, you have to again figure out what is the balance left with you. That means you have stock with you, you have certain added purchases to it, then there are certain sales, that means that stock is going out, then there is certain purchases that is getting adding up, and that's the fun here, that you'll be able to understand how LIFO and FIFO works. Basically, or rather especially, this is for more understanding of LIFO and FIFO. So let's start with the sum and then we'll figure out how exactly we're supposed to do that. So now we are going to prepare the store ledger card under FIFO method. Let's prepare the format here. Now the format here that we'll be preparing is very interesting. The reason being, you will understand each and every item as to how the flow is going, that is in first in and first out. So the first column is date, the second column will be particulars. For the third column, we'll be mentioning the header as purchases. Now this third column will have three different columns internally here. Now these three internal columns will define what is the unit, what is the rate and what is the amount. Now the columns that we have prepared here is the first one, purchase, unit, rate and amount has been mentioned. The next column will refer to sales here, and the last amount will refer to, or rather the last column here will refer to balances. Now when we're talking about this store card ledger, this format will be common across all the methods, that is FIFO, LIFO, weighted average method. So let's understand the FIFO method first. That means first in, first out. let's start with the opening balance, or rather mentioning the opening balance here. So on 1st of July, this was the balance that was brought down, or opening balance basically. So in the particulars, we can mention opening balance. There is nothing that needs to be mentioned in the purchase and sales column right now because this is related to the opening balance. So we'll mention the units in the opening balance there directly. So the opening balance here is 50 units, rate is 10, so the amount will be 500, that is 50 into 10, 500. Now the next transaction refers to July 5, that refers to purchases done. Now for July 5, we are mentioning additional purchases, that means 30 units were purchased at the rate of 12 rupees, and that gives you a total of 30 into 12, 360 rupees. Similarly, this purchase will be moved into the balance, and that will give you the exact, or rather the total balance here. Now, the next transaction that we're talking about is, after the balance being mentioned down, is the purchases. So on 5th of July, there was a purchase that was done for 60 units at the rate of 9 per unit, and the amount has been mentioned there as 540. Now we'll move this into the balance side. With every transaction being done, we are maintaining a line here. That means that will be a separation line basically between two dates. So on July 5, the balance here is mentioned as the earlier balance, the 1st July, that was 50 rupees, and or rather 50 units at the rate of 10 per unit. And additionally, we purchased 60 units at the rate of 9 per unit. So that is the balance that has been mentioned. Let's cut a line here and then go on to the next date. Now the reason why we have cut line here is so that you can understand how the working is going to be when it comes to sales part of FIFO method. Now when it comes to sales, the next transaction that is mentioned here, July 13, sales happened for 70 units basically. So right now we'll mention only 70 here, but the bifurcation will be in a specific format, or I'll explain how that format works here. Now, when you're selling out 70 units, let's check how much balance you have in the previous entry. You have a total of 50 units plus 60 units, that means 110 units. Out of that, you're using 70 for sales. And the method that you're going to follow is first in, first out. So the opening balance came in first. That means 50 will be completely used here. So 50 units will be completely used here at the rate of the specific rate that has been already mentioned. So 50 unit, the rate was 10 for that specific 50. And now to complete 70, another 20 is pending. So that 20 can be taken from the next lot. That means the balance that we have, that is 110. 50 has been already used, 60 is still pending. That 60, out of that 60, 20 can be used here. So now, once this is done, we have to mention what is the balance left. So out of 50, or rather out of 110, 50 is completely utilized, 60 is pending. So let's mention only 60 as balance here. So out of that 60, we have utilized another 40, or rather we can talk about another 20. So balance is left is 40 at the rate of 9. So that is the balance that is left, and that is how the sales is supposed to be tackled. Now let's go on to the next transaction. Before that, let's cut a line there. Now on July 23, there was another purchase that was done. So let's figure out what is that purchase that we have. Now on July 23, there was a purchase that was done that has been mentioned here. Now this purchase will be moved into the balance side. In the balance side, we already have the previous lot balance of 40 units. So 40 units at the rate of 9 and 40 units at the rate of 8 has been mentioned. Let's go on to the next transaction. Now on July 26, there was another purchase that was done here, which has been mentioned in the purchase sector. Now we'll mention that same thing in the balance. But before that, we have to add, or rather take down the balance that has been mentioned earlier. So if you can see, we have mentioned 40 units at the rate of 9, 40 units at the rate of 8 and 20 units at the rate of 16, which has been mentioned, and that is the balance that we have. So totally we have 100 units left with us. Now let's go on to the next transaction. Now the next transaction refers to the sales part here. Again, sales is one more thing that has happened. So 90 units have been sold out. To figure out 90 units, we already have 100 balance with us. That means 40, 40 plus 20. Now we'll start with figuring out how many units have been, or how many units are supposed to be sold out. So 40, if you see, the balance is 40, 40 and 20 that we have. So 40 and 40 is anyway gone. Out of 20, we have to use only 10 here. So let's start with that. So if you can see, we have mentioned here 40 units at the rate of 8, 40 units at the rate of 9 and 10 units at the rate of 16 has been mentioned here, and that total amount has been also mentioned. Now the balance here that will be left is only 10 units. So that is the balance left which has been mentioned there. After this, there is nothing to worry about, there is nothing to tally here. So the last part that we'll be doing here is totaling all the amounts. Now, when it comes to total, you will only total the quantity and the amount here. No rate totaling to be done. This is only as per FIFO that we have done here. So when it comes to purchases, the total amount of purchase has been done and the quantity has been also mentioned. 120 quantity has been purchased along with opening balance, and 1180 is the amount for it. Now we'll go ahead and mention the sales total. So for sales total, the quantity is 160 and amount is 1520. And now when it comes to the balances total, only the balance total has to be taken. So the total amount that we have taken here is 10 units at the rate of 16, which is the only amount pending with us, and that gives you a total of 160 here. So that is figured out. Now this is how the store card ledger is prepared. This is as per the FIFO method. We'll start with the LIFO method now. There's a similar kind of format that we'll be preparing. The only difference is that instead of FIFO, we'll be starting using LIFO here. Now the next method that we'll be using is LIFO method, and the format remains the same. So let's start with LIFO now. So now the first thing that we'll be mentioning here is the opening balance itself. So the opening balance has been mentioned, which is in the balances column. Unit is 50 and that is multiplied by the rate of 10 and the amount is 500. Now next transaction that we are making here is the purchase transaction. So the purchases transaction amount, unit and rate will be mentioned in the purchase sector itself. Now once this has been mentioned, that is 60 units at the rate of 9 per unit, amount is 540, we'll carry forward this into the balances. Now in the balances, we'll first get down the balance, that is opening balance first, and additional 60 units that were purchased at the rate of 9 per unit has been also mentioned here. Now that is the balance as of that date. Now the next transaction will refer to the sales transaction. Now when it comes to sales, 70 units were sold here. Now here the trick is, when you're selling out 70 units, you will take the second lot first because the last in will be going out first for the sale. That means 60 units that were purchased rather, that will be sold out first. And the balance 10 that is required to complete the consignment of 70 units will be taken from the opening balance of 50. So with this, the sale transaction will be completed of 70 units. Hence, this amount, or rather this way the calculation is supposed to be done. Now the balance will only have 40 units, which is at the rate of 10 per unit, and the amount has been mentioned here, and that is the closing balance as of that day. Now the next transaction that we have to record here is July 23 purchase transaction. So 40 units have been purchased at the rate of 8 per unit, amount is 320, that will be moved to the balances. So the balance as of that date is 40 at the rate of 10, 40 at the rate of 8. 8 is the newer one, 10 is the oldest one. Now the next transaction on 26 July is also a purchase transaction. So the next transaction, or the next unit that has been purchased, is 20 units at the rate of 16 per unit. That gives you 320. Let's add it to the balance there. So the balance as of that date is also mentioned. 40 units at the rate of 10, that is opening balance part. 40 units at the rate of 8, that is the previous purchase, and the current purchase is 20 units at the rate of 16. Total balance has been mentioned. Now when it comes to sales, 30th of July, there was a sale of 90 units in total. Now, we'll go from top to bottom from the previous balance, or rather from bottom to top for the previous balance. Now, when it comes to 90, you understand that 40, 40, 40, or rather 40, 40 and 20 was mentioned here. So, the below part, that is 20, this will be taken first. Then, 40 will be taken first, which gives you a total of 60. Additionally, you need 30 here. That will be taken from the first 40 here. So these are the quantities that can be taken for sale transaction. Let's multiply and figure out the amount here. Now under balances, or rather in the balance column, we have already mentioned the total balance. We have completed all the sale and purchase transaction. The next phase that we have to do is the totals part. That's the final part of it. The balances total is quite easy to understand, that is 10 units. The purchase total will be, so the purchase total refers to quantity being 120, cost being 1180. Now for sales it is 160 and the sale value is 1580. The closing balance itself is 10 units at the rate of 10 per unit, which gives you the value of 100. So that has been mentioned there. Now this marks the closure of LIFO method. What happens when the similar thing happens in the weighted average cost? Let's figure out that now. Now when it comes to weighted average cost, the purchase, sales, balance, the format will still remain the same. The slight change that you will figure out is in the balances column where the rate is supposed to be mentioned, because at that point of time the rate will be weighted average rate. So let's prepare the format first. So the first thing that will be starting off will be the opening balance here. So let's credit the opening balance first. So opening balance has been credited. The next will go towards the purchase transaction. So now that we have mentioned the purchase transaction, the balance has to be mentioned in a specific way. You cannot go ahead and mention the rate directly. What you need to do is a simple way. The previous opening balance was 50 units. You have purchased another 60. That means the total of that will be 60 plus 50 will give you a total of 110 units. Mention 110 there. The total amount of this purchase is 540 rupees. The earlier balance is 500 units. So that total will be 500 plus 540, which will give you a total of 1040 amount. Now, if you divide 1040 by 110, you will get a rate. 9.45 is the rate. That means that is the average rate here, and that has to be utilized for the next sale transaction or for any other transaction. Now, let's start with the next transaction here. On 13th, there was a sale transaction recorded. Now, on 13th, when there is a sale transaction recorded, 70 units were sold out. The rate that will be applicable here will be 9.45. So that means the amount here is 661.50. So that has been calculated. Now the balance that will be done is out of 110, 70 has been sold out. So the balance left will be mentioned here. 40 items are left as balance amount. Then let's figure out what is the amount difference. That means 1040 was the balance, out of which 661.5 has been taken out as sale amount. That gives you a balance of 378.5. Now divide 378.5 divided by 40. 9.46 approximately, plus minus somewhere there will be a little bit difference, but this is the amount that will be figured out. Now this will be used for any other balance calculation in near future. Let's start with the next transaction then. Now the next transaction refers to 23rd of July purchase transaction again. 40 units are purchased at the rate of 8 per unit, giving you a total of 320. Let's mention this in the balance. We already have certain balance with us. That will be 40 units balance. Now another 40 will be added to it. That will give you a total of 80 units. 378 was the earlier balance. We'll add 328. That is the current purchase, and that will give you amount balance. Now whatever answer that you have got, that is 698.5 divided by 80 will give you the rate here. So that is the rate that we have figured out. Let's go to the next transaction here. The next transaction is on July 26th, again a purchase transaction. That purchase transaction is for 20 units here. Now 20 units purchase transaction at the rate of 16 per unit. That means 320 amount. Again, this will be added to the amount, quantity will be added to the quantity of previous balance. So 1018.5 is the amount total and 100 is the quantity total. So earlier 80 balance plus 20 purchased will give you a total of quantity 100. If you divide 1018.5 divided by 10, that will give you the rate here. So the rate has been figured out. Now let's go on to the next transaction. That is the last transaction here. Now that refers to sales transaction. 90 units are being sold out. You already have the rate, you don't have to calculate, that is 101.85. Now once this is done, you will have to figure out the balance. That means out of 100, 90 units has been sold out, that is 10 units balance is left. So out of 10,185, that is 10185, you have subtracted 9166. So that gives you a balance of 1018.5. That means earlier it was 10,185, now it is 1018.5. That will give you the current rate. Again is the same rate that we figured out. So this is the final value, or rather this is the final calculation here. Now again, when we have to prepare the totals here, we'll have to mention all these details, that is totals. The balances total is easy. 10 quantity of units left balance and amount is 1018.5. Let's total the purchase column. Quantity will remain the same and the amount of purchase will also remain the same here. That means 1180 is for purchase amount total. Sales amount, or rather sales amount will differ, however the quantity will remain the same, that is 160 units. So the total of sales amount is 1578.15. That is the amount that has been mentioned here. So this is the total average cost, or rather this is the total of the weighted average cost. Now let's prepare a cost chart of this. So while we are preparing the cost chart here, FIFO, LIFO and weighted average cost method has been mentioned. Purchase and sales amount only will be taken into consideration. So if you can see the cost sheet that has been prepared here, purchase and sales comparison has been given. Under FIFO, purchase total amount was 1180, which is constant across all the methods. Only the sales amount is changing across all the methods. Under FIFO method, it is 1520. Under LIFO method, it is the highest, that is 1580. And under weighted average cost, it is 1578.25. And under weighted average cost, it is 1578.15. This is the difference. So there is a slight change only in the weighted average cost and in the LIFO method. However, the FIFO method is showing the lowest sales value. So this is the comparative cost sheet that we can prepare when this kind of illustration is supposed to be done. I hope this video gave you a clarity about how you have to go ahead under the weighted average calculation and how the rate are supposed to be calculated. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.